Yes, the people, we're back with another video. It's been a minute. Welcome to the channel, Ebro Trades. Today we'll be covering the Wyckoff method. Now, the Wyckoff method is actually something that I've avoided for a long time because it seemed really complicated. The idea of this weird schematic that I have to look for with all these different abbreviations and letters and phases, I don't know. That shit scared me a little bit, so I personally avoided it. But then recently, I've actually been encountering this very specific problem, right? Now, I'm sure a lot of you can relate to this problem. So, I would analyze the market, I'd find my bias for the day, for the week, for the month, and then take a trade in accordance with my bias. I'd mark out all my points of interest, so my fair value gaps, my order blocks, my supply zones, my demand zones. Then, based on my bias, I'd make a trade. But the market would first stop me out going on to literally hit my take profit. So literally I kept facing this problem. So um we'd have this, something like this. So the market would be bullish, right? Um Something along these lines here, right? So say this is the market. It's a pretty bullish market. I'd find my bias for the day and then I would take a trade. So say I'd go long, but I would literally take the trade somewhere, say over here. So it'd be a long trade. And every single time I kept having this problem. This is for months now. My stop loss would get hit before the price action would actually go back in my favor. So I just keep getting stopped out before the price literally goes back in my favor and ends up hitting my TPs. And if this is a problem that you're facing, then this video is for you. Trust me, Wyckoff is going to change your life. I know it sounds complicated, but I promise you it's not. So, what is the Wyckoff method? The Wyckoff method is a type of market behavior, is a schematic or a behavioral trend in price action that was discovered by this guy called Wyckoff, right? And there is two types of Wyckoff. There is Wyckoff distribution and Wyckoff accumulation, right? Wyckoff distribution, Wyckoff accumulation. Now, I suggest you pause the video right now and read through this website here. So it's called school.stockcharts.com, and find the Wyckoff method page and read through this. Like literally read it, because the Wyckoff method is explained so well here. And then this video, I'm gonna delve into it, so it's sort of supplementary to what is covered here, and I'm gonna show you examples. But I suggest you pause the video and read through this. I know a lot of you hate to read, but reading is mandatory. If you actually want to get good at trading and profitable in these markets, you have to read through these things. So pause the video for a sec and read through all of this. So I presume by now that you've read the content of this website and you know that there is two types of Wyckoff schematic. One that happens at the top of a market, and that's called the distribution, and then what happens at the bottom, and that's called the accumulation. Now we're going to focus on the distribution of this video, so we keep these videos short and sweet. This is going to be a two-part series where we cover distribution in the first video and then accumulation in the second video. Now, you don't actually, in the markets, you're not going to be looking for every single one of these points and labeling them realistically, especially if you trade on the 5 minute. So, what I tend to look for when trading Wyckoff, which has really helped me in the past few weeks and months, is essentially I'll see this behavior. So, I'll see the PSY, I'll see the buyer's climax, I'll see the automatic rally, which comes down. Then I'll see this ranging behavior over here, which some would call consolidation, before seeing our UT, which would rise above our buyer's climax, and then even more just ranging behavior before I see our spring. And our spring or UTAD would either rise above our UT or it could come below. So it could go up here or it could come down here. And essentially it's just a liquidity sweep. But usually it will come up here, it would clear both the UT and our BC before breaking structure to the downside, and then I would enter off a fair value gap retracement to ultimately short the stock or the pair or whatever it is I'm trading. So we can label this here pretty simply. We've got I don't understand why this text is so big. All right, whatever. Okay. So we've got our preliminary supply. How do I make this shit smaller? Okay, so we got our PSY, right? We've got PSY. Okay, we've got our buyer's climax. We've got our automatic rally. We've got our secondary tests, right? This could all be considered signs of weakness, just being super choppy. And then we see that the price rises above our buyer's climax. And this is essentially to trick people into thinking that we're going to go bullish, when in reality, this is just a way to engineer liquidity. So it's for people to place long orders here so that their stop losses can all be cleared when ultimately price comes back down. And then we've got our spring over here, right? We've got our UTAD. And I'll be looking very carefully for these points. I'll be looking for PSY. I'll be looking for buyer's climax. I'll be looking for retracement, which is the automatic rally. I'll then be looking for a protrusion, so a high which is close to or exceeds the buyer's climax, before finally looking for our UTAD, which is our up thrust after distribution. Now, sometimes we will form a UTAD that goes higher than both the UT and the BC, but sometimes we won't have this. We won't form a UTAD that goes above the UT. Sometimes this point over here would actually be over here. So sometimes our UTAD would actually be below the UT. And that's something you just have to, it will take practice with a lot of back testing. You'll see a lot of examples where the UTAD, the spring, does not necessarily sweep the UT. So sometimes the UTAD will be over here. So there's different examples, which I'll show you. And then I'll be looking for a fair value gap over here, a bearish fair value gap after the UTAD, which I'll enter off of following the retracement into the fair value gap. So I would usually enter this trade over here. So with WYCKOFF, I'm going for this fair value gap. I'll put my entry here. 2-to-1 risk reward usually, because I focus more on win rate. So we're looking for something like this. My stop loss above the fair value gap, and that is the trade you look to take. And obviously, you close partial profits at 1-2, at 2 but then you'd have multiple TPs down here. But that's WYCKOFF. It's so simple. Trust me, it is not complicated. It is not complicated. Once you backtest this, I promise you, it works like crazy. You will stop getting stopped out. Because if you don't know WYCKOFF, you'll see this price action, you'll see the buyer's climax, and then you'll think, okay, all right, we formed a lower high, let me go short here. You'll think, oh, okay, let me take a short position over here. I formed a lower high, let me take a short position over here. And then you get stopped out. And then you see a higher high, and you think, oh, okay, shit, let me go long instead. Go long instead. Let me take a buy over here because we've got a high, and then you never hit TP and you get stopped out again, and then price goes down. Like WYCKOFF accumulation and distribution are the ultimate way of not becoming liquidity in the markets. It's simple. Essentially, our checklist for WYCKOFF, well, my personal checklist will be: I'll be looking for. So what to look for? What to look for? I'll be looking for PSY, my preliminary supply. I'll be looking for buyer's climax. I'll then be looking for an automatic rally, or they call this the automatic reaction, which is essentially this retracement after the buyer's climax. I'll then be looking for a series of secondary tests, which are peaks between the BC and the UT, between the buyer's climax and the upthrust. I'll then be looking for the UT, the upthrust. I'll then be looking for a UTAD either above or below the UT. Then look for FVG on the bearish leg after UTAD short position upon retracement into the FVG. Now, I know this sounds like complete jargon right now that you don't understand, but I promise you, this has changed the way I trade. The past few months, I stopped making videos because I kept falling into the same mistakes, which was getting used as liquidity in Wyckoff regions. But once I looked into Wyckoff, I stopped making these mistakes, and that's why I'm making this video. I promise you. So I'm gonna show you some examples now. All right. So example one, and I've pasted the Wyckoff distribution schematic next to the example just so you see how similar it is and how accurate this schematic is in terms of looking for Wyckoff in the market. And by the way, I suggest that after this video, you literally do this on your trading view. You copy this image from this website and you paste it on your charts and you just scroll back through the charts. You don't need to use the replay tool. Like, literally just scroll through the charts and try to find examples of Wyckoff distribution because you can see them clear as day. So we're going to go through this example right now. This is Euro USD. This was the 1st of May. I think I took this trade actually. I think I actually took this trade. We're on the 10-minute time frame, but Wyckoff occurs on every single time frame. This just happens to be the 10 minutes. So let's label this together. So we see clear as day the buyer's climax over here. We can see this massive push up, and that is clearly our buyer's climax. So the schematic is going to stay over here just so we can label this. But hopefully, if I can just fix this. So Wyckoff distribution, example one. Here is our buyer's climax. So we see our buyer's climax. And this is how I want you to backtest. I want you to literally copy the schematic onto your chart, scroll through the charts, and try to find a lot of examples of it, just to train your eyes. Because me now, I'll literally look at the charts for like 10 minutes, and I can see whether or not Wyckoff is forming today. If that makes sense. It's just my eye has become trained to find this schematic forming in real time. And that's a skill that you'll acquire by backtesting, by looking at the charts. So this is our buyer's climax, which means that this over here is our PSY. And listen, the PSY, the buyer's climax, all these different points on the schematic, they can take all shapes and forms. They don't have to look exactly like the schematic. The schematic is there for reference. So here's our PSY. Because our PSY is just the last high that formed before the buyer's climax. Now, the leg down after the buyer's climax is our automatic rally. So we'll label that. This is our automatic rally. Now, we've got a secondary test. We've got multiple secondary tests. You know, I don't care for labeling every single part of it. I'm just labeling the things that I care about. So we've got secondary tests, but a series of them. Yeah, so we've got a series of secondary tests. Yeah, a series of secondary tests. Because essentially what I'm waiting for. So how do I know it's a secondary test and not a UT? Well, the UT is gonna reveal itself. It's gonna be a high that protrudes above any secondary test. And so here you could quite clearly see that this is our UT. So you could quite clearly see, I can manage to copy this, that this is our UT because it sweeps the liquidity of all prior STs. So this right here, if I can manage to draw an arrow for you, is our UT, which means that the high immediately that is formed immediately after the UT is our UTAD. And this is just a trap. This is a trap to trick people into thinking higher highs are being formed, and thus we are going to rally. So, let me. I hope this makes sense. By the way, I hope this makes sense. I hope this makes sense. This UTAD this spring, we're going above. We're exceeding our UT, just so people can fall into the trap of thinking we're now gonna go bullish, and so people place buy orders or long positions over here. Retail traders, stupid retail traders, put their stop losses here and think, oh, okay, we're gonna go high now. We're going higher. We're making it, boys. We're making money. And then they all get stopped out. They all get used as liquidity. Don't be that guy. Don't be that guy that gets used as liquidity. Don't be that guy. So this is our UTAD. Now, this is our UTAD. This is our UT. All I'm doing now is I'm looking for signs of weakness, signs that, okay, we're going bearish. And in this case, we can see that bearish structure is now forming. We're forming lower lows and lower highs. So I see this lower low. I see another lower low. For me, I'm not even waiting for a tracement into an FVG, even though we can see that multiple fair value gaps are also being formed. So we see this fair value gap over here. And a lot of people would wait for retracement into that fair value gap. And then we see another fair value gap is formed over here. But I personally don't wait for retracements into fair value gaps, though you could wait for retracement into this fair value gap and then go for entry over here. Short position, so you could place your entries at the fair value gap, targeting your stop loss just above the fair value gap and targeting, 1 to 2 RR initially for your first TP, but then ultimately you could have gone all the way down here to catch a 1 to 9 risk reward. There's a 1 to 9 risk reward. This is a crazy trade, guys. But I think I actually entered over here when I took this trade. Immediately, when I saw this convincing bearish motion, I entered the trade over here. I placed my stop over here, and I'm very conservative with it. So my first TP was at 2 RR, so around here. And then I placed a second TP at 4 RR where I closed the rest of my position. But you see, this is a perfect exemplary example of, if you know WYCKOFF and you can spot it on the charts, then you will no longer be used as liquidity in these markets. You will pass that prop firm challenge and you will be profitable. All right, guys, that's it for this video. I think that example perfectly demonstrated what WYCKOFF distribution is. If you want more examples, let me know in the comments and I'll make another video with more examples. I will do whatever you guys say in the comments. Please like, subscribe, put any questions in the comments. I'm going to reply to all of them. And thank you for watching. I appreciate you guys. Any feedback, let me know. I'm trying to buy a new mic as well because apparently the audio is shit. But I appreciate you boys. Take care.